CNBC-TV18.
He is known to exist in several versions of himself: art collector, activist. Well, those are some of them, but today he joins me in his global high finance avatar, John Studzinski, Senior Managing Director at BLACKSTONE and Global Head of BLACKSTONE Advisory Partners. John, thank you so much. Always a pleasure to speak to you when you were here in India. I want to refer back to the conversation we had in Davos in January. It seemed then that maybe in the second half of the calendar year things would improve, though we had been talking about the sovereign debt problem for over a year and a half by then. Things have only gotten worse. From where you sit, and it's a great position because you understand industry, you know politics, international finance, how bad is it looking right now?
There's no leadership anywhere to be found, and I think we're looking for leadership. There's no leadership. It was interesting to see the announcement coming out of Washington this morning that maybe by the beginning of November, the IMF and the World Bank and some of the other European entities would actually have some type of further guidelines for how to solve the European debt crisis. I don't really think the world can keep having these goalposts move in terms of solutions. You either have leadership, you are a leader, or not. It's a very binary thing. So right now, at the beginning of the year, I think the world felt there was leadership. There was some inkling. The European Central Bank looked like they had a model. They obviously don't. And the fact that you need to take another 4 to 6 weeks to discuss a series of issues that have been debated for 2 years when this Greek crisis first started to evolve is extraordinary. So this is a crisis of leadership, or the appearance of lack of leadership.
Do you think Greek will default? If it does, how bad is it going to be? Is it going to be a throwback to 2007, 2008? Or is it going to be less bad or more bad? How does one know?
This is a long conversation, but I think one of the things that's quite interesting about Greece is that to solve this problem, you have to start with what is the basis for any economy's development. What are the strategic industries of Greece? They're probably logistics, given its location. There's actually a lot of interest in Greece right now from places like Asia, China. There's continued interest from capital from Turkey into Greece, because it is a very good hub for transport and logistics. It is a very good hub for shipping. It is a very good hub for tourism. So it needs to figure out, first of all, what is its strategic purpose, what is the basis for its economy. They haven't really done that yet. I think if you talk to people who are really in the world, they have real concern that Greece has to develop a rigorous write-off of debt, and now we're talking about 40, 50, 60% of the debt, and then figure out on what basis can the economy move forward and what industries is Greece going to invest in. You have other countries in Europe, such as Portugal, where it's very hard to see what the basis for their GDP growth is going to be, and I think Portugal is another concern. Ireland, on the other hand, I say, has done a very good job in the last 2 years. Well, they've had the right attitude. They didn't have to go into detox or anything. They basically were not in denial, and they've done a lot of tangible things in the last year to show the investment community that they're trying to take their problem seriously.
Do you believe that Greece will have to write off 40 to 50% of its debt? And if that happens, it will be a default. Now, what is it going to mean for European banks, financial institutions? Because that's been one of the key concerns the last several months, that if Greece defaults, however you term that default, you put a fancy name to it, you try and hide it under all kinds of bond swaps, whatever you do, if it is a default at the very heart of it, how destructive is it going to be to Europe's financial architecture? And really, are we going to then face issues of contagion, that hurting North America, that hurting other parts of the world?
I think we go back to my point about leadership. I think if we say we're going to have a structured default, people have been talking about this for 1 to 2 years. Many banks who've had exposure to Greece have managed that exposure downward. People have looked at other ways of hedging it. You know, this notion of austerity is fine, but if someone's on a pension of 10,000 euros a year, taking off another 1,000 euros is going to be financially or practically impossible for that person to sort of live, which is going to generate much more activism. Clearly, in an orderly restructuring, And these are about orderly restructurings. If someone sat down tomorrow and announced an orderly restructuring with respect to Greece, the markets would say, fine. Oh, there's leadership. There's a plan. 1, 2, 3, 4, 5. Managing expectations. Oh, okay. The markets would respond very favorably because there would be an example of a thoughtful plan. And you know, it's quite interesting because right now the Chinese sit there in Beijing as the banker of the world, very smart, and they've been managing, they're now on their 12th five-year plan, very thoughtful, and they look at this and they can't understand why are all these debates taking place in public. Why don't you come up with a thoughtful plan, and then once it's in place, announce it so that markets have confidence. That's the way the Chinese have managed their economic expansion. It's worked very well. And I think to a certain extent, the West can certainly learn a bit from the Chinese about sort of sitting down in a room.
The political system is so different, right? I mean, how are you ever going to ask Angela Merkel to ignore what's going on in all the regional elections, which she seems to be losing, and instead pay attention to footing a bigger and bigger and ever bigger bill with regards to Greece, or maybe eventually even Italy and Spain? Who knows how bad it'll get, as opposed to China?
Well, I think you've indirectly, or maybe you meant it, you've asked probably one of the most important questions today, which is, this is not really at the moment about Greece. Greece is 1 to 2% of the GDP of the European Union. Right. This is really about what role does the German economy want to play going forward. German consumer confidence is at an all-time low for the last 10 years. And remember, the Germans restructured their economy well after World War II. They've had to absorb the cost of merging with East Germany, which many people forget. They're a very disciplined regime in terms of how they run their close proximity with their labor unions. It's a very impressively run economy. And you know, why do their goods still get charged at a premium globally as exports? Because many people want the high-quality German manufacturing. Sure. So this is about really where Germany goes with respect to the European Union and what Germany's role wants to be in the future. And I think the jury's out on that.
Is it because we've seen German bankers resign from the ECB in protest for the last several months now, simply because they don't want the ECB to be playing an expanded role, they don't want the ECB to be intervening in the bond market? Germany's making its position very clear.
No, that's my point. I think Germany's now got to sort of show its hand and say, okay, what role are we going to play, what role are we not going to play? And you know, this argument that you keep hearing from economists saying, well, Germany would never want to take a stronger role or separate because their currency would be so strong. They wouldn't have the same degree of export success. Some of that might be true. They do need to manage, on the other hand, subsidizing a large part of what's happening in Europe right now. But on the other hand, they are an impressive economy. They have a very smart, they don't have the same skills gap in their labor force, for example, that other Western European or American companies have. They run a much tighter ship.
Okay, instinctively, John, from where we sit, and I know it's impossible to predict, so I won't ask you for a prediction, but what's the worst case scenario you're building into till the end of this year? Do you believe we'll have a structured default for Greece, or will it be unstructured, chaotic, and therefore spook global markets? Do you think Germany will finally agree to foot a larger bill for all the peripheral countries, or do you think that this politics internally will continue to scupper any chances of potential leadership?
I think the worst
case scenario.
Well, the best part for the rest of the year would be flat and stagnation. I think the worst, and with some type of guidance or leadership, I think the worst case scenario is that in 6 weeks' time, there's not a solution that anyone can agree on. I thought Christine Lagarde, who's a very impressive woman and who actually, having been a labor lawyer by training, she's got a much broader perspective. She's just not an economist in a little box. She's got a much bigger macro perspective. She's sort of citing the fact that the 400 billion that the IMF has is not likely to be enough to deal with some of these issues in Europe. You've had other people saying that the amount of money that is going to be required to be mobilized may be upwards close to $1 trillion. Right. These are big numbers, and these are numbers which are going to be paid for by the next generation of people in Europe. And I think the issue with Europe, which you haven't hit on yet, but you really need to go there, I think, is that the reality is Europe has got the least growth prognosis or demographics of any part of the world right now. So if you're an investor like Blackstone, you're very excited about emerging markets, India, China, Brazil, what have you, and you're still going to invest in North America because you've got a big population there and the biggest economy in the world. So the question is, how is Europe going to